Evening, mate.
All right, let's jump straight into it. So obviously, didn't even check the week. I'm kind of going day by day. Then Melody brought it up that we actually have news again tonight. It's just one of those weeks, right? Um, Timing around open. So we have 12 a.m. here, USD open. Sorry, 12 a.m. And then tomorrow as well. 12 a.m. USD as well. So one to watch. Over the last many months, I've traded news, obviously to test the theory of purely just taking the orb breakout, and it's been hit and miss, and that's what I was saying to you guys earlier in the chat, is that trading the orb during news is hit and miss, and it's not so much the trading the news part of it. It's more so if the opening range candle is 100 pips or 120 pips or even more, your risk factor is just increased by three. So if your average trades that you take when you are trading the orb is between 30, 40, 50, 60, and you take a trade that's 100 pips, 120 pips or even more, it's kind of like, how do I say? D Depends. Are you risking 1% or 2% per trade? If you're sticking to a percentage on each trade as you should, then cool. It should only affect you if you're doing the maths right, then it should only affect you by 1% or 2% on your account. The problem is a lot of people don't do that accurately or wonder why, 30% of their account's gone when they're trading a 100 pip move or, and so forth. So it's not that you can't trade the orb during news, it's just the amount of times that it's been hit and miss, and um, the ones where it did go in the right direction eventually. It came down and whipped and hit stop loss first and then headed up in that same direction. So it's more about just the volatility of what news can bring sometimes. So is it possible? Sure, you can trade the orb during news. Do I recommend it for the strategy based on personal testing, not back testing, forward testing? Um, it's something that I haven't done. I guess the thing with the orb is because it's so time based, and back testing and forward testing doesn't really change that much other than obviously the spread when you're actually getting into the market, right? So if you go back and back test and go through, it's not so much about the trades itself, it's the quality of trades, because not every trade, even if there is no news, not every trade, if it breaks to the upside, should be taken, right? Or if it breaks to the downside should be taken. So it's more about just, having a better picture of whereabouts are we in the initial move, whereabouts are we after the orb candle has opened up, and then is there probability of price continuing in that same direction? So where we are right now, the thing is, we are at all-time highs on gold. So where can you determine on where this all-time high is going to finish and when is it going to reverse? Now, it's been on a pretty solid run, and I guess, if we look at news that's expected tonight, where are we? Wednesday, Thursday morning. If we look at what's expected tonight, right? So it's the same scenario. Actual greater than forecast is good for currency. So, job openings more than 7.38 million, good for US dollar, bad for gold. Should we expect a correction? If it's above, we should expect a correction on gold. And is a correction on gold due? It's not that it's due based on anything other than, what's happening in the world, and if US dollar is uh, good and it continues to go up, then there should be a correction. And each one of these is an area of imbalance. And imbalance is simply a displacement of orders that were never filled, right? So we've got a little one here, we've got a little one here, but this is on the daily time frame. So if we break it down and go back even to smaller time frames, let's just expand that for a bit. We will see that we're breaking away from an imbalance of orders. right? So we've got imbalance there, and we've also got imbalance here, right? We've also got a little bit of imbalance here. We've also got imbalance here. So along the way during this move, there's been multiple areas of where price has moved away from, a whole heap of pending orders, and even as far as, somewhere down here. But this is arguable to say that, price came in and filled those orders and then started to continue back up. But as we start to see these ones and we start to push out from here, the higher that price goes, the higher the probability of these areas coming to be touched. And why do I say that? Well, if you go back and look at history, and every time that there's been an area of imbalance, prices come back and touch back into those areas, right? So this steep run that we're on right now, while it's good and great for those that are going long, there's going to be a correction due along the way. All right. So that's when you go, okay, so news tonight is good for currency, meaning bad for gold, because what happens when it's good for currency? People tend to shift from gold back to US dollar. We may see a correction. We may come back down to, this in between 35.25 and as low as 3,500, right? Is that possible? 100%, because as we start pushing up, price corrects, right? Gets to a certain point and then it starts to correct. If it's influenced by what's happening in the market with news, then that may be where we start to see these corrections. So when I'm looking at the orb and I'm going, okay, if we're looking at the orb right now, and where we currently stand, see, last night we were talking about news and we had the breakout here, and it was, it was at 120 pips here. Did it move and break past 3,500? Yes. Would you have made money on this breakout trade here? Yes. Right. Hit and miss. Was the risk where price was where it finished? We were pushing to a previous structure. There could have been one more rejection and price come down first before continuing back up. We kind of anticipated this, a break over 3,500, a retest of 3,500, and then another opportunity to take it long. But it's not that's different technical analysis compared to what the orb really is, right? So looking where we are now, let's go here. We've got our peak. 3,561, currently 350. We're on currently 110 pips. Um, yeah, where if price closes in 7 minutes on this candle here, and where are we likely to head to? Well, our first structure is going to be 3,545, a break of 3,550, solid number. Cool. I'm confident to take a short down to there. If it continues down further, 3,540 would be the next target. But again, depending on what happens through the orb here, you're not going to take, and this is where the risk is, okay? If your risk based on the strategy itself is 110 pips, but you're targeting a previous structure as you should to lock in profit or at least partials, then you're taking a 0.5 to 1 trade. Why do I say a 0.5 to 1 trade and not a take it at 3,540? Well, this is your previous structure, and this is where we've got supply, right? We've got an order block here where price just, pushed out from here. So we've got people, traders, we've got retail, we've got banks, whatever it is, potentially having orders waiting at this level. So as an area of target, that would be your first target as partials or even full. And then your next target is 3,540. So 3,540 at a breaker 350 would be close to a one-to-one trade, not even one-to-one, because depending on when you get into this trade. So that's what I'm talking about with risk. Unless your percentage calculations to stick to a 1 to 2% is on point, you may see yourself catching a 5% or a higher if you're not calculating correctly on that drop. So keep that in mind on gold today. Is it due for a correction? Yes, it has been traveling up for quite some time. On the hourly, we've got a nice area here at 3,500. where we have imbalance. All right, so right there, 3,500, 3,510. Is it possible for price to come back and retest this area first before continuing up? 100%. It's consideration for where you look to take your trades. So in this scenario, right, if I'm talking about taking a flip candle, um, and we're in a pretty strong bullish trend here, it would look something like this. If we took the short, we're essentially going against the trend, right? Keep that in mind. Yes, even though price is due for a correction, if we take a short now, we are going against the trend, which means something like this. If we go, where is my thing? If we go and this candle here is a short and it goes against us, doesn't quite hit where we're targeting. That's actually going to hit where we're targeting. So if it goes against us here, we get picked up and, you know, comes back and hits our stop loss. This is the time I would take a flip and double down because we're trading then with a trend, right? That's how I would take a double down flip trade. And if it stops out there because of volatility or whatever, then I'm obviously not going to take another trade after that. I'm just done for the night. Okay. So trading a short is against the trend, even though we have probability based on pending orders, based on imbalance. Trading with the trend is obviously going to be better for us. We want to continue with this run. We want to continue to see if the market is continuing bullish. We can't control that. So again, based on the orb rules, should you trade, I'm just putting this out there, should you trade news with 100 pip candle? Not unless your percentage risk is on point. Okay, I'll just say that pretty clear. Not unless your percentage risk is on point, because here your first target is going to be that. So you're risking essentially 0.5 to 1. Let's have a look at US30. So we're looking at US30. Right, so US30 broke away, came back, filled through these imbalance. We actually had this area here of imbalance as well. Um, if we're good news tonight, right? So watching this to see what happens at 12. Where is it? There. If we've got good news on that, which is good for currency, then we should expect to see this trend continue. So again, is US30 trending? Yes. It's not a clean trend, but it's still an uptrend here. So trading bullish on US30 on this break is trading with the trend. You're trading with that momentum, right? So that's our current rejection. We've got a bullish previous 4 hour, which is good. And we've got a top range here, which means our bullish breakout on this candle is going to be above 45261 to continue that out as long as we don't break early. Yep, that's maintaining bullish momentum. Good that we had that opening candle push all the way up to here. So bullish breakout from here. What does our candle say? 206 to 308 roughly based on our structure here. We are not going to take a trade here. We're going to take a trade at a break at this here to go bullish on that. Again, 100 pips. What is your risk factor? Is your risk at 1% to 2%? Do you have the math? So, and now you could be working out what does that percentage look like for you, right? So we're 1 minute out. Again, guys, this comes down to you and your journaling. I took Sydney this morning. I don't need to trade again tonight, and I shouldn't based on what's happening. But let's see. So at this point here, where if we break this 3, 4, 3, 5, 4, 9 bearish, if we come back first, 3, 5, 5, 5, I will take this down to a partial at 3, 5, 4, 5. On US30, I'm not liking the drop to this structure here. I would rather take a breakout of that to the upside. But if US30 is coming down, then we should naturally see price push up from here. So now it's breaking the bottom of that orb. Um, yeah, not taking US30. Obviously, it's moved already. If price comes back into this area and then creates another lower high, maybe, but I'm also looking for, I'll have a look at this small trade here with a partial at 45 if it does continue down. The ideal trade for this on gold is going to be a break to the upside. Um, um, what are we looking at? 355. Yeah, see, so that held. It should be quiet. I mean, that was quite a significant move here. It should be quiet though up until the next 13 minutes, or if it's going to price in before the actual release, we should see very soon. But even though we dip down low here, I would still be inclined to take a buy out from here if that came first versus a short out of here, right? But let's see what comes first. Again, guys, have your risk on point if you decide to trade tonight because we don't usually trade news, and especially being 100 pip spread. Oh, 100 pip opening range candle, not spread, sorry. 100 pip spread would be crazy. No, I'm going to enter. Let's see, let's see. If this flips bullish, that's what I would prefer. But we cannot control the market. So we over 3,550, retesting 3,550. We break here. That's a solid retest of 3,550. But if not, and we going down really. US30 is going down, gold is going down. It's going to be a very small. Let's see. See if we get the break. So this is now our range. That was our opening range candle now, but this is still our range here. So that's what I was saying. If this was your breakout, this is your target. It's kind of like if we're breaking a 349, 350 here, and we're targeting a 345 first partial. What was that? 207, 167. Hey, that is close to 50 in there. But we'll see what happens with news. I think we're going to kind of hover a bit here. 8, 167. US30's just flipped on the 4 hour, so that's not on black on Octa, that four, not on black ball. See, we've got imbalance here, so bullish should be here. 15. Gonna place a sell stop here. Feel like we're gonna drop and we're getting close to news. Got to get below 13549. 3549. Look, 35.
Hey Jason, why are you looking for shorts if gold's in an uptrend?
Hey.
Why would you be looking for taking the short if gold's like the market structure is more bullish?
Well, like I said, overall, this is a better trade taking price to the upside, but um, where I'm looking here is if we get this correction and price comes down to 3545 first, like I said, we shouldn't even be trading gold tonight. The ideal trade is, like I said, it's going to be a 3560 break for that continuation out from here. I'm just observing on where price is at now to see if it's going to dip first based on all the structure that we have or all the imbalance of orders that we have below pending. So if it doesn't, that's cool. I'm still going to look for that break to the upside to see if we continue up. But again, it's going to depend what happens in 6 minutes. Obviously, here, US30, a pretty clean drop in. So I guess yeah. I mean, what's the forecast? Is 487 in. Oh, so it's lower. Has that already come out? Is it 12 a.m.? Is the time wrong? It came out early. 487 forecast was 49, so not good for currency. So that's why we're getting that drop off. I didn't even notice that. I thought it was due at 12. Yeah, that's early release, hey, which is what's caused this drop here. So naturally, we should continue up from here. So I'm not going to place that sell stop and see if we can maintain this momentum up. That quite a significant drop here to that would have been that clean breakout. Partials and pretty much complete on US30. Yeah, so just completed out through there. Not really anything else that would have been complete on that. But hey, it is what it is. Risk factor again for anything over 100 pips is always going to be high. We'll see if we get the break to the upside on gold here. If US30, I'm not sure, did anyone take a short on US30? Yes, no, maybe. Don't know. So if US30 continues to drop, we should have gold continue to rise. And if we break that 3560, I'm going to look for a breakout continuation. Man, look at this. 255, 10, 100 hitting now. So 155 pips on US30.
Think it'd be worth trying to trade the bounce on US 30s?
Hey,
Do you think it'd be worth trying to trade the bounce once it bottoms out on
well,
US 30?
you're trying to pick the bottom here. That's the
Yeah.
only thing, is you're just trying to pick. So is it here? Is it now? Is it now? Is it now? All right. So you're kind of winding it down. It's quite a significant move already,
Yeah.
so it should come up pretty soon. But rather than try and cherry pick the bottom in hope to find the correct support, um, you know, let's look to trade something with the trend if we get to this upside here. So as long as if this maintains bearish momentum, we should naturally see a shift from price, right? So the news wasn't too crazy, right? Usually, I mean, this is quite a significant move on US30, but I mean, it wasn't crazy that
No.
crazy to kind of influx a bottom or top wick here. It pretty much just slowly staggered down through that range, and there's just kind of, you know, the volume hasn't really picked up on gold as yet, so we shall see. We shall see. Oh, is this it? Is this the news now? 12 o'clock. That was a bit delayed. Now we've got a bit of movement. US30 looks like it's still continuing down. Gold is looking positive here. Should get a break of, might put in a buy stop. We just watch it for a minute. See what happens. Our opening range is 3561, roughly. 356130. Three, five, six, 130. So,
Is that you putting your buy orders in, Jason?
buy stop three five
Yeah.
six one 50.
Mm.
It's adjusting. Take profit and stop loss.
And your stop would be about 3549-ish,
Yeah, around that
the
area.
bottom of the
Yeah.
range.
Yeah. We just want to get past this high here to take that breakout. So
I did some back testing with the strategy today, although from April till start of September,
yeah.
and just purely just trend following without considering like news or previous structure points. And what I've found out was every month was positive, roughly about 13%, except
Yeah.
for 1 month, which was -2.
Yeah.
So then I was,
It's
yes,
the strategy itself, and it really comes down to the only difference through the month is when I first did the challenge, I wanted to do it in a way that we had no thought process go into it. If it breaks, we take it. If we place our stop loss, we place our take profit, and then we let it play. And I've done that for many months, and it's been great through the challenge. Even though we had a bad start, we had a good finish. We didn't take every trade, or I couldn't take every trade, but there was, we'd still finish strong. The thing with this strategy is that yes, while it requires patience, so does every other strategy. It requires patience, right? Until you get into the trade, and then you should technically, once you're in the trade, you should set a take profit, you should set a stop loss, and then walk away, right? You shouldn't need to come and stare at the screen for hours until it either hits your take profit or stop loss. But statistically, over time, the strategy it's been gold. Like it's nothing new. It's like it's opening range breakout strategy is more about going, okay, well, there are many ways that traders trade this strategy. And people say, oh, well, if you trade it on every breakout, then institution knows that, so they're going to place their orders there and blah blah blah. But people say that about every strategy that's out there. If you use Fibonacci, institutions are waiting for you to to put your entry at a particular point, and they're going to hit your stop loss, and then et cetera, right? The reality is when an institution is coming in to place orders, they're simply looking for where orders are pending. And what is a stop loss? A stop loss is pending orders, right? So if you've got a stop loss in the order book, then you've got pending orders for an institution to go, yep, I'm going to enter at this point. And if there's a million of us retail traders going, hey, let's all trade very much the same technical analysis, then that's not because they're stop hunting you. They're essentially going, there's a whole heap of orders, which means there's a whole heap of retail placing their stop losses at a certain point. Then that logically makes sense for them to come in and fulfill hundreds of millions of dollars in orders into the market, right? So this strategy and what I like about it is that it's statistical, right? It's like win or lose today doesn't matter. Win or lose tomorrow doesn't matter. It's just what has it shown over a long period of time? And then, I'm really big on data collection because data collection goes, okay, why were the trades that we took a win or a loss? What was it? I mean, that important part of it means that, okay, well, I shouldn't have taken the trades that were against the trend. I should have only taken the trades that were with the trend. I shouldn't have taken, and this is where I talk about news and hit and miss, is that I shouldn't have traded news during the strategy because I've had it miss more so than I've had it hit, even though it might have been good over time. But statistically, this is probably one of the easiest strategies to trade that requires the least amount of technical analysis, that requires the least amount of thinking. It just requires traders to be disciplined, not get too greedy on every on trades that they think that are going to go to the moon, and just trade it day by day, right? And if you trade it day by day, you'll realize soon enough that what does it really look like at the end of the month? If you think about people trading for a long period of time or trades that people that have been trading for years, what is their biggest struggles? Like I trade in and out of the market. I'm, 3, 4, 5 trades a day. I have good months, I have bad months, is trying to find consistency. Whereas this is you just trade the same time every day, morning and night, take one trade, take two trades, totally optional, but it's the same, you know, it's the same setup every day is the same setup, right? Um, and I think it's more about, us as traders, we get in our head more than anything. And we don't take trades because of that. So, or we fiddle with the trades like here, we want the break to the upside, but that doesn't mean the market's going to do that. If we take the break to the downside, should we take the trade down? Well, consider our areas. Is this our first take profit? Yeah, that's our next one, or even higher at 340, 3540, right? Based on price coming up and grabbing liquidity, if we break this, I'm going to take a trade down, right? I know I had a pending buy stop there, but it is what it is. So if we continue down from here, then I will short it, even if I want to trade with the trend and continue bullish out from here, because I don't want to overthink the strategy. If we're trading with the trend, cool. We want to take the trade to the upside. If the market is actually correcting now in 3,560, because the hardest thing with all-time highs is that no one knows for sure where the top is, right? So it could be that the opening range and the market's telling us that all institutions are placing sell orders now and we are looking to head down. So at an all-time high, it's pretty hard to judge on when we're about to stop or when it's about to correct. But if we follow the rules, and the rules are we wait for a break. If we would trade with a trend, that's a higher probability of being a profitable trade versus trading against a trend. But at the same time, if it breaks to the downside, you don't have to take it. I'll take it, right? If it trades, pushes and breaks previous structures to the upside, then I'll take it, right? So it's happening either way. So opening range breakout is simply that. It's the opening range candle breaking out, right? It's as simple as that. Whatever it needs to look like in that sense. I think that's where this strategy has worked over a long period of time. I'm just gonna not even bother look at US30 at the moment because it's doing its thing. But yeah, that's where this has statistically proven profitable over a long period of time.
Yeah, I just basically dumbed it down. If it breaks the highs, then it's a buy. If it breaks the low, then it's a sell, and then just let it play out. Don't tamper it with it or anything. Go aim for a 1-to-1. And then yeah, throughout the total of 5 months, net profit, if you're attested Sydney and New York, uh, both, and it resulted in the total 5 months of 47% gain if you're just risking 1 to 1.
Right? That's you can't ask for a better result in trading something that doesn't require much thinking, right? And screen time. Like the good thing about this is you wake up in the morning and once you break the opening range, you either place a trade or you don't. At nighttime, I mean, if you're in Australia, at nighttime it's the same thing. You're coming in
Yeah,
at the same time, looking for the same exact setup without having to worry about, when price hits a certain level on fibs, when we get the right candle, then we'll enter. Like there's not a lot of thinking in the setup process, which is awesome. Like,
yeah,
and then specifically it's proving profitable. You don't need anything else, right?
yeah, it removes the touch and feel aspect out of it. It's just mechanical, just one, two,
Yeah.
three.
Yep. 100%. Mechanical removes emotion. Well, it should remove emotion from the trading because you shouldn't be touching it after you're once you're in the trade because you're only placing a stop loss or a take profit. The only time you're really trying to or you should consider touching it is if you're thinking about taking partials, right?
Hmm.
Um, Other than that, there's no need. Just make a decision and trade it the same way every day. And that's what we did during a challenge, right? We did a 30-day challenge where every time it broke out, we just took the trade, stop loss, take profit, and marked it out, right? And then, hey,
They
it
don't forget.
so no, it's good. It's good, it's good. It's just this is the patience part of it, right? But the good thing about the patience part in this sense is that you're just waiting for the same thing. Whereas the patience in te standard technical analysis, like you could be waiting hours before price comes back to a fib level. You could be waiting hours before price gets to um, an SVG or area of imbalance. Before price gets to a support area, before it breaks out of a resistance area, there's I mean, I've been trading as a breakout trader for the last how many years, until I started playing with this strategy. And yeah, I'm like, someone showed me this years ago. I would have probably just stuck with something like this because it's not about winning every day because we know with any strategy, it's not a win. Not every day is a winning day. But can you make money long term is the ultimate goal for any trader. Is that fix that emotion towards how you feel about money and then keep trading. And when the market is um, showing you a profitable strategy over a long period of time, then hey, you don't need to change what's not broken. So,
Yeah, I realized basically the business model is just like how the casino works.
mm,
It's the statistics of many hands, but they just even though the odd is like 1 or 2% in their favor, but after many hands, they'll always still be up.
yeah. And I remember many months ago, I think it was last year even, I put a video in the Traders Edge group when I was more active in there, and I openly did okay, if I just, using the replay tool, go back and rewind, 6 months, and then just take 10 trades, not even looking at it, just using a 1 to 1 or 1.5 to 1 risk reward, whatever it was, and just let it play. And I think it was still like, 4 wins, 6 losses, and still profitable, right? Like people get too much in their head about having to win every trade. And the crazy thing is we will naturally hurt ourselves in the sense that we can be okay, like in our mind as traders, we can be okay with drawdown to as much as our account will allow us, but we can't handle a little bit of profit before adjusting our stop loss to break even. You know what I
Mm.
mean? It's a whole mental game. It's like, I don't care how much drawdown I'm in, but if we go to profit 0.02%, watch me take that break even, right? It's just you can tell like trading is a mental game, right? It is playing with your head over and over, and that's your emotional connection towards money, right? Like it's just it's funny in the sense that we all do it, and it's like we will ride that pain. It's like I will have that dagger in my back as long as he doesn't hit my stop loss, and I will ride it.
Mm.
Put me in profit a little bit. Oh, keep it safe.
Yeah, that's right.
And then it comes down, hits your thing, and goes all the way up to where you would have, if you would have just left your stop loss where it was, right? And then
True.
let it play out. But hey, we are who we are. But that's all that's the good thing about mechanical is that it should remove that emotion over time, right?
Mm. Definitely.
Day in, day out, do the same thing. Win or lose, it doesn't matter because statistically, long term, it's proven profitable. Like, get that mindset right, man, you will make money. And the hardest thing with that and with traders that are, trading with small accounts is that you then try to weigh up, right? You try to weigh up. I'm spending so much time in the markets, but I'm only making little bits of money. Well, if you focus on the percentage gain, then work out how to grow your account. If you can't, do it from your trading account fast enough, then work out how to add more funds into your account externally, right? Because when traders come in and they go, okay, well, I got $1,000 account and I made $20 today, they start thinking that's a bad thing. Man, if you had a couple of extra zeros and then you made 2%, you wouldn't be complaining about 2 grand a day. You know what I mean? Like it's
Mm.
it's all it works in ratios to our mindset to go, oh well, if I'm not we're so conditioned in I need to work X amount of hours and then I'll get X amount of dollars and then I put value against how much time is worth and how much I made from that, which is why a lot of people give up on trading because unless they make money fast, which is I need to double my account to make it worth it, then they usually tend to give up. But, I've been in this game for 8 years now. I can tell you now the slow game wins the race. Like, just keep at it until it clicks or until you find something that works and you find your edge and you just keep doing the same thing over. Like, you know, it's not for those that yeah, want fast cash. Like, back in the day when I was just doing course after course after course, the first thing I usually talk about is psychology. And I usually open up with, if you're here to make money from the get-go, you might as well quit while you're ahead because it is not going to happen in trading. You may get a taste for it when you get started, but then you are gonna be hit with losses. And if you don't know how to handle those losses, then you're gonna quit real fast. Like trading is a get rich slow scheme, not a get rich fast scheme. On the internet, it's shown as you can make money as fast as possible, but the reality is it takes time. All right, guys, so we get in the breakout here. This looks like a pretty solid push 3,560 playing at the moment. Rejecting of 3,560 currently. That's that pretty solid retest to 350. And we're kind of just testing here at the moment. So partials on this breakout is going to be 61, 65 roughly. Actually, what is it here? 61.50. It's roughly going to be about where we are. 50%. 67. Again, all-time highs is always going to be tricky to try and determine. usually when if you look at gold and where it price tends to pause, look at every 50, right? Or every $5, right? Every $5, every 50 pips, right? So if we're talking 60 here, 60 is our struggling point right now, and we break past it, 65 would be your initial, like if we're going off psychological numbers, 65 would be your initial take profit. That's a 50, based on a 60 breakout, even though our range is a lot higher, right? And we always, based on the orb rules is we want to break that range. That would be, a 60 breakout still puts us at a 65 take profit. Even though our orb breakout is 61.50 roughly, it doesn't really put us at 50 pips. It puts us at like, 30, 35, right? So not as big as that partial, but that partial is based on that psychological level of every $5 in all-time highs, right? You'll notice on BTC as well, when BTC starts breaking through and creating all-time highs. It's not many pairs, right? If price has never gone to a certain level, there's kind of a awareness of at what point do we take profit along the way, or where should we be cashing out along the way? And that's really how it's kind of played based on a psychological level. It's just, okay, let's look at 65, and then from 65, let's look at 70, and then we look at 70, let's look at, up from there. So just for consideration, if you are taking the trade tonight, guys, again, this is a news day. We've kind of had, a bit of movement already that kind of does that. But again, the orb rule itself, based on what I've traded, trading a over 100 pip range, unless your risk is on point, you can get caught up in losing more than that percentage. So just keep that in mind if you are taking a trade tonight. So we're looking at a 61.50 break, obviously consideration of your broker spread, depending on who you're trading with. Maybe a bit earlier.
Jason, have you heard of prop firm account?
Sorry?
Have you heard of prop firm account?
Prop firms, yeah. Yep. I was going to start one many years ago.
Yeah.
But I found out how rigged they are and what their purpose is. So I kind of didn't go down that avenue.
Well, they just make money from the accounts, right? Because the statistics is 90% of people actually don't
Yeah,
make
so the
money.
way a prop firm works, so there's the way a prop firm actually works, and there's why there's so many and so many startups um, with prop firms is because they depend on 90% of people to lose money. So they don't actually, and that's why they usually have a testing phase. And I mean, there are some that say they're putting you straight into a book, and they're not really. So, which essentially means that you're just playing on demo accounts, even though you think you're playing on real accounts. It's so bad that I won't say, but some of the biggest names in trading, who you think are legitimate, like brokers, are not legitimate, right? That full prop firm side of it. They came to me and they said, "Hey, Jason, we can create an account for you." I'm recording this, aren't I? Don't hold this against me, but I'm just sharing the open knowledge that's out there. We can create an account. Well, I won't tell you who it is, and that will keep me safe. We'll create an account for you, and you can put it out there, advertise it as real, and you can change anything that you want because you have all back-end knowledge. It's all done through the software. That makes it look like, it is legitimate and all that. And I was like, how is a company as big as yours? And this was a sales guy talking to me. I was like, how is a company as big as yours allowed to do that? And it's like, well, it's all demo money. Like, it's not real. It's not actually going into order books. So you're playing with people's money that's not actually placing real orders. It's just software that makes it appear that, that is the case. So I'm like, I can't get behind that. Like, I wanted to be a part of a prop firm where you were actually taking and developing skills of traders to then help them get funded so that they could then make money. But the whole scheme of prop firms is so that you is so that you lose most of the time. So think of it as an educator, me, I'm helping you guys and I'm training you. It would be like me owning a prop firm and then teaching you guys to lose on purpose so that I can make money from everyone that loses. I'm like, this doesn't make sense at all. Like, that's the only way a prop firm makes money is like, think of FTMO, like those big guys. I'll say their names because partially to what they're doing is they've been doing it for the longest time and probably one of the most legitimate ones out there. But in saying that, it's big names that you guys would know in the broker area that have prop firms that are just purely running um, everything on demo and paying people out. And when you hear prop firms that actually struggle to pay people out or delay people to pay people out or saying that all these traders are breaking rules and that's why their account got closed and all that kind of rubbish, that's because there's probably not enough funds to pay a real trader that had made $20,000 on a trade, right? It's like, okay, well, we have to get all the losing trades, all the traders that have lost money, and then pay this one trader who has actually made money, right? So they're really banking on, and back in the early days, like to get into challenges was at least $100, $200, $500, $1,000, depending on how big you wanted that account. So they were banking on, a lot of losing happening through that time because none of it was going through actual order books. It was just all through software.
Mm.
I'm like, man, that's dodgy. So if you were going to go use a prop firm, only the biggest guys, FTMO, um, anyone else, which they say and they'll put you through a demo phase first, which is going through that challenge. And then from there, because you don't make money if traders are in a book, right? It's
Mm.
you make the prop firms because I think when you go a book, it's like a spread or even like fractional. So they might make cents on the dollar for a trader that's trading in a book versus B book, where it's not actually if you have $100,000 account in B book, it doesn't mean anything because you're only paying out on profits on that $100,000 account, which is grabbed then from other funds somewhere else. But FTMO, they have a demo phase and then they go into I'm pretty sure they go into a book after that. So challenges, I think you can buy straight into no challenge. Like I think they have you can just go straight past that. Um, But yeah, prop firms, depending who you look at, I can tell you now 90% of them aren't actually placing real trades. Even
Uh,
though the traders think they're placing real trades. And because
would you
I
just
went
use
through
it
many.
to like for leverage just so that, instead of because you're using $100,000 account, but then you're just paying like $500 for it. So even if you can get the profit split, that's still worth it, right?
Oh, 100%. Like if in the sense of if it costs me $500 to get a $100,000 account, and I can stay disciplined and that company does pay out, sure. I mean, by all means, like it's the easiest way to get to have a larger account that you can then earn a percentage on. Um, Based on having a large account, right? So it is good in that sense if the company pays out, which is the bigger guys, the guys that have been doing it for a long period of time, not the ones that are coming in to hustle everyone and and make money. So yeah, by all means, like if you spend $1,000 or $2,000 to get $100,000 account and it's legitimate and you can stay disciplined, because you got to remember though, like $2,000 on your own account, while it doesn't seem like a lot to start with. You're kind of going to build discipline over time versus going, if you can't, the reality is, if you can't trade $1,000 account consistently for 90 days, then you can't trade $100,000 account just because you have more money, right? Having more money in trading doesn't make you a better trader, it just means you have more to lose, right? So, and I learned that the hard way throughout my years of trading. I made trades where I made hundreds of thousands of dollars in crypto and also lost hundreds of thousands of dollars in crypto, because having more money just means you have more, like a bigger percentage to lose. Like yeah, it's just part of the game, really. But prop firms, yeah, big guys, sure, every day of the week. All the small up and coming names that offer deals and all that kind of stuff, man, yeah, you're just throwing your money against the wall, to be honest. 65. What did I say? 65, right? Round number. Look at that. Oops. Psychological level. 65. Pending retail sell-off. Right? That is just all-time highs. Is going to always fluctuate. Okay, that's our high. This was our 3560 was our actual breakout of previous structure. This is where $5, right? So if we break and flip past 65, next is going to be 70, right? And then from 70, may see a little bit of bit of rejection, and then what's the next one? It's going to be 75 up from here. So depending how we go on this, that's a 12:30. So what's our 30? Well, a 30-minute candle is good. That's we maintain above 50%, so 3,558, which is still within our 100 pip orb. So we should retrace, usually 50% of the candle. And as long as we maintain above, we should flip and continue up from here. But again, it's all-time highs. Partials are smart on your way up. So where's my stops on? Okay, so 50%, 50. Yeah, so 60 breakout, 65 should have been first partials. I mean, this is, again, don't go based off this indicator. This indicator is purely working based off the size of the actual candle itself and then calculating a 1-to-1 either side. Still working on tweaking this, because for me, when I'm looking at this, the guy that's building this out, when I look at this, it's not always like your partials, your take profits. Obviously here it's a bit different. We don't have any previous structure, but your partials and take profits are always going to be based on a previous structure for me, based on the strategy. $45.6. All right, guys. So we're in the trade now. So, or for those that are in the trade now, so looking at targets on here. So partials at 6, partials there, but really partials at 65. Target for me on this breakout still going to be at 70, not at obviously 73 here, which is a 1-to-1 here. Just being that all-time highs, right? We're kind of staging through these levels. So yeah, I'm gonna call it there, guys, and then check out, obviously, see what happens tomorrow morning. If there's anything on Sydney, I'm running because I'm doing nights now, not mornings. I'm running around pretty early in the morning as well. So, but anyway, I'll see you guys tomorrow night, and we'll see how news plays out before we, jump into a trade again. 100 pips. We don't usually take these trades. I'm in this trade. We're trading all-time highs. We're pushing it up. Win or lose, doesn't matter. Good risk is all that matters. But other than that, guys, you guys have a good night's sleep for those that are going to sleep, and for those that are awake and are around, we'll see you guys tomorrow.
Catch you, mate. Thanks again.
Thank you.
Yeah.
Thanks.